Good morning, it's Monday the 14th of November. This is the Phoenix Blue Morning Update brought to you today by Tom Colley. Okay, well, an amazing week last week. We have a new president-elect in Donald Trump. We had a bank holiday on Friday in the US, so be cautious with your trading today. We may not have seen the full play out from the election. We really only had a couple of days, or certainly one clean day, of the markets knowing of a Trump win and whatever may come from that. Now let's start over on the news, and then we'll go and look at what we know about the potential Trump government. Okay, so already overnight last night we had the preliminary GDP from Japan, which came in at a healthy 0.5% against a forecast of 0.2. We had Bank of Japan Governor Kuroda speaking. I haven't actually been able to find anything about that speech so far this morning. And then out of China we had industrial production, which came in just below forecast, but continues on the relatively positive data we've had out of China recently. 3 p.m. this afternoon we have ECB President Draghi. He's talking in Italy. Will be interesting to see what that conversation says, potentially about any reaction to Trump and his potential policies. And then overnight we have the monetary policy meeting minutes out from the Reserve Bank of Australia. So certainly Draghi something to watch there this afternoon. As I've already said, the markets may have some more reaction rather than normal trading into the early part of today's trading session in the US, simply because Friday was that bank holiday. So what do we know about Trump? What can we expect from him? Well, from a trading perspective, most of the things are really quite positive. We're looking at potential reduction in regulations on banks and the repeal of what's called the Dodd-Frank legislation that came in post the crash. That is obviously going to be seen as a positive by the banks and the markets. He's also talking about lower corporate taxation. He's actually talking about halving taxation from 30% on corporations to 15%. That would have a massive cash boost to the US economy. The only figure that I've actually found was if it was just to reduce from 30% to the same level we have here in the UK of 20%, that would release around 600 billion US dollars back into the markets as such. Another interesting thing he's talking about repatriating US corporate cash from abroad. Currently, the US companies have to pay corporation tax at 30% on their earnings abroad. Trump is talking about a one-off reduction to a 10% tax to bring that money back onshore in the States, and obviously that's another huge source of funds for investment. Companies in the US have been keeping monies abroad and then even borrowing at the current low rates. So there may be a possibility of that occurring. He's then also talking about $1 trillion worth of infrastructure spending over the next 10 years. So all those things can be seen as being generating growth. In fact, he's targeting doubling the current growth level, which is currently about 1.5%. So he's talking about targeting 3% growth for the US. Now he needs to do that because the things he's attempting to do here by reducing the corporation tax and things like that will increase US debt unless he at least doubles that gross. Now what that's also going to lead to inevitably is rising inflation in the States, which in its turn should bring on a speedier return to what we might call more normal interest rates from the Fed. Now, Trump has had a go at Janet Yellen, the head of the Fed, through the campaign, suggesting that she was acting politically in favour of Hillary Clinton. So it remains to be seen whether how Janet Yellen's position pans out going forward. The market still expects the 0.25% rate rise in December. But as I said earlier, all these things, unless he gets the gross, will incur rising US debt. But from a market perspective, and the markets are relatively short term, what we're talking about is a lot of capital going into the markets. He's talking about trying to repatriate jobs back to the manufacturing jobs back to the US. And being somewhat isolationist in terms of import tariffs, etc., etc. So a lot still to learn, but at the moment the markets are looking very positively on what he's doing, and we're seeing a lot of dollar strength out of that. It's worth mentioning that he doesn't actually take power, isn't inaugurated until the 20th of January, and he's just in the process of setting up the group of people who will organise the transition from the Obama administration to his new administration. But effectively, he's the guy that the markets are going to look for. It's over for Obama. He didn't have a lot left to do. He didn't have a power in the other government areas, the Senate and what have you. Trump, in principle, has the Republicans in all the necessary places, so as long as they play ball with him, then in principle he'll be able to get anything through the legislative area of government. Okay, let's go over and look at the charts. Here's the dollar index. We can see we had a huge move down here through the election when it became clear, really when it became clear there was a chance of Trump winning. The markets had priced in and expected a Hillary Clinton win. That came as a bit of a shock. The markets always react negatively to uncertainties. Once that uncertainty had turned into certainty, we immediately saw the dollar pushing back through, gaining strength for all of the reasons that I've just mentioned. So we are at this moment in time looking at levels. We're approaching this key level here around 100. So we're seeing real dollar strength out of what's been happening. We've had a big dollar move already overnight since the markets opened last night. So very much playing out to that dollar strength. There are a lot of opportunities setting up in the markets. They're not there yet. It needs price to move further, retrace, etc., etc., which is a nice situation to be in because we want to see it play out a bit more. So patience is the watchword here. We're looking at the level of around $100 here, and then potentially a pullback before we go long again. Over on the yen, well, we've seen the yen break out this morning, and that's yen weakness to the upside. We expect that as that's the payoff for dollar strength. This is a typical market that we've got. We're looking for a close above and maybe even a further close above before we get a pullback to this key level that we're looking to trade. So we're looking for that dollar strength to continue to play out before we get a smaller pullback and this market to the long side. Same with the euro. We've had euro weakness overnight. We've got a level here that we're looking for almost intraday, although it looks like that could actually turn into end of day, having had such a bullish move so far. We see dollar right down at 105. Sorry, euro down at 105 here, following that pullback. If we get that pullback again, it all depends on how strong the dollar pushes through. The only major currency with any strength other than the dollar through the back end of last week was the pound. Why the pound? Well, the Trump presidency tends to help the pound somewhat offset the Brexit worries. One of the things Trump will almost certainly do, and even the EU will give up on it, is they will call a halt to the negotiations on the US-EU trade agreement or potential trade agreement. It's an extremely difficult thing to set up because of it has to be agreed by every single member of the EU. We saw that in the last week or so with the Canada-EU agreement, where it looked like a couple of areas of Belgium, not even the country as a whole, could put a spanner in the works that would stop that agreement going through. They managed to sort that out. That agreement did go through, but from the perspective of the UK, if that agreement doesn't take place between the US and the Euro, that gives them, the UK, a better chance to negotiate a deal. It's much easier to negotiate a deal much quicker between two independent countries than between the US and a huge bloc like the EU. So we are seeing pound strength there. We're not looking to trade the pound because we've got two strong currencies there, but we are looking for opportunities right across the pound crosses where most of the other currencies are currently showing weakness. So there's an area there that outside the majors that's definitely worth keeping your eye on this week. There will be opportunities if that plays out as we anticipate. What we've also seen is a risk-off scenario. We saw gold do exactly the reverse of the US dollar. We saw a big move up through the night of the election as the markets became uncertain when they decided they couldn't be certain of a Hillary Clinton win. We've then seen a big sell-off in this market. As you can see, it's respecting these levels really nicely, and we're looking for opportunities to for a pullback. We may even trade the pullback intraday to this level around 12.50, but certainly we'll be looking for trades back to the short side once we're at 12.50 there. Risk on. If I said risk off before, I meant risk on. Risk on is money into the stock markets and out of gold. Sorry if I confused you there. Here is the Dow. Dow made new all-time highs. It's pushed through substantially. It's long and making headway again today. We're looking for a pullback here to the previous highs. The other American indexes haven't yet broken their all-time highs, but we will be looking for exactly the same again. Similarly, we'll be looking for strength in the German DAX and the Japanese Nikkei in the same way. We'll see their currencies sell off. We'll see that being beneficial for business, for exports, etc., as the value of the currencies decrease. And we expect to see those equity markets following the US. So a lot going on. We've talked about potentially what Trump might be looking to achieve. If that happens, we can see the potential for more rapid normalization of US interest rates. We may, into next year, actually see what markets were expecting to a much greater extent this year, which is a divergence in monetary policy between the US and effectively the rest of the world. The rest of the world still has a accommodative policy. There is quantitative easing. They're buying bonds. And they've been looking to drive the values of their currencies down almost without exception across the major currencies. The dollar's strength by its nature will do that. There'll certainly be a delay before we see those economies pick up on the back of any sort of pickup in the US, and therefore we should see that big divergence between interest rates in the US and the rest of the major economies. Okay guys, if you like what you see, if you're interested in how we trade, if you like how we set up the charts, clean charts without indicators, etc., with fundamental analysis, technical analysis and commitment of traders analysis, we have a free trading event tomorrow. This is from 2 till 5 p.m. in London. If you're very quick and you pop on the website literally now, go to the events page, leave us your details. There are 1 or 2 places, I believe, available there for that event tomorrow. We have a similar event, which will be our second event in Norway on November the 21st. Again, all the details on the website. Click through to give us your details and we can send you joining instructions, etc., etc. And that's 3 hours of free trading alongside Phoenix Blue fund managers. You'll also get the opportunity to understand to a greater extent how we set up our charts, how we analyse and how we actually trade the markets. There'll also be the opportunity to meet shall we say, your peers, existing members of Phoenix Blue, who've moved their trading on using the processes and the techniques that we use, and have seen significant increase and advantage and benefit for their trading. Okay, guys, that's it for today. The first day of the new world according to Trump. Have a great day's trading. Do be a little bit cautious early on. And we'll be back with you in the morning. Take care.